Live from Dubai, this is Bloomberg Daybreak Europe. I'm Jemana Bersachi with your top stories. U.S. futures slide ahead of Wall Street's reopening today. Meanwhile, after the Bank of England's knife-edge vote, jobs data is forecast to show more cooling in the UK labour market. Geneva takes center stage as the U.S. and Iran hold indirect talks aimed at resolving their long-running nuclear dispute. That'll be followed by another round of U.S. brokered discussions between Russia and Ukraine. Plus, BHP shares surge after copper's rally drives bumper profits. We hear from the CFO of the world's largest miner later this hour. Well, if you're just tuning in, we are coming off what has been a thinner trading day than usual. Yesterday was U.S. President's Day, which means U.S. cash markets were closed for business. Also, most Asian markets are closed for their Lunar New Year. But as we set up into the cash reopening, S&P futures leaning towards negative this morning, down 0.5%. So declining, a bit of a cautious tone there prevailing. Brent also in focus. We're tilting slightly more negative, down 0.6% as well. But keeping a close eye on how those negotiations will go in Geneva today. Indirect talks between Iran and U.S. as we speak of military buildup, which continues from the U.S. side in the region. And then take a look at the pound today, just trading above 136 as a handle, slightly weaker versus the USD. Some big jobs data coming out. And to that, let's get to our main risk events to watch out for on today's trading day. 7 a.m. UK jobs data is going to be key. We have several very influential UK prints coming up this week. The jobs data and the CPI print to watch out for. So 7 a.m. the UK jobs data. Later on, we get the German zoo survey, which is a good litmus for how consumers and business are feeling about the state of the economy. And then later today, we're going to keep a close eye on the meeting that's taking place between President Macron and Prime Minister Modi in India. And this is after Modi also attended the AI summit in France not so long ago. So now Macron is returning the visit, and also defense talks on the table as well. So those are your main risk events for today, in addition to the fact that U.S. markets will be back online. Let's get started. Well, in geopolitics, the U.S. president says he will be indirectly involved in nuclear negotiations with Iran, set to be held between the foreign minister Abbas Araghchi and U.S. Special Envoy Steve Witkoff in Geneva later today. Donald Trump told reporters he believes Tehran is inclined to make a deal.
So I'll be involved in those talks indirectly, and they'll be very important, and we'll see what can happen. I mean, it's been typically, Iran's a very tough negotiator. I think they want to make a deal. I don't think they want the consequences of not making a deal. They want to make a deal.
Anur Ant, Bloomberg's managing editor for Middle East and North Africa, joins me right now. So talk us through the setup for today's discussions, and also the fact that the Iranian foreign minister had a meeting with the IAEA chief yesterday, too.
Yeah, well, what we've seen from Abbas Araghchi's meetings with Gross yesterday, the IAEA chief, is that, and the fact that they went to the IAEA chief with some sort of proposals regarding their enrichment facilities and enrichment activities in Iran, is that Iran, going into these meetings with the U.S. later today in Geneva, wants to treat the talks as a negotiation platform to be able to get a sanctions relief and link that to a possible curb on its enrichment activities. This comes after basically months and years of Iran maintaining that it has an inviolable right to enrich uranium on its soil as a signatory to the Nuclear Non-Proliferation Treaty, but it has been signaling some kind of room for maneuver, some flexibility around that red line, but has been clearly linking that to a possible sanctions relief. So that's what we're going to be watching as the two sides.
You've got to think, as part of the negotiations, is allowing for the inspectors to actually have access to the sites also.
That's definitely a part of the negotiations.
So, Anur, at the same time, we speak about the military buildup in the region as well. Both the U.S. and then also overnight, Iran saying that they're conducting military exercises around the Strait of Hormuz. So how should we read this?
So those drills definitely do affect the sentiment surrounding today's talks. For the first time in many, many years, we have seen that Iran's Revolutionary Guards conducting these military drills with a very specific language surrounding them. They talked about basically smart control of the Strait of Hormuz, which is very important for global oil trade. And they also cited the Islamic Republic's geopolitical advantages to deliver a rapid and decisive response to any threat emanating from the area, which is nearby where the U.S. military buildup is taking place. So clearly, Iran is signaling that although it wants a deal, it is ready to respond militarily should the talks in Geneva fail to reach a compromise and basically avert another war in the Middle East.
Anur, thank you so much. That was Anur Ant, Bloomberg's managing editor for Middle East and North Africa. Well, those aren't the only peace talks happening in Geneva today. It's a busy day in Geneva as another round of U.S. brokered discussions between Russia and Ukraine are also set to get underway. Major sticking points are still unresolved amid continued fighting and deep divisions over land and security guarantees. For more, we're now joined by Bloomberg's Anthony Halpin. You know, one of the questions that comes to mind is just sort of the logistics of how all these discussions are going to take place. I have images of Steve Witkoff sort of shuttling between rooms. They're both major portfolios.
Well be the case. Yeah, he's going to be very busy today in Geneva for sure.
So let's talk about Ukraine-Russia. Are there any signs that either side is willing to make concessions at this point?
Well, Donald Trump was certainly putting the onus on Ukraine, as he put it, to make a move that would allow for some sort of a deal. Russia's position has been effectively the same throughout these negotiations. It wants territory that it doesn't yet control as part of any potential settlement, and Ukraine is resisting that on the grounds that this territory is essential to its defense, and in principle, it's Ukrainian territory, so Russia shouldn't have any claim on it at all. But the pressure is certainly on Zelensky from the US in these talks.
Exactly that. And to quote President Trump, he said he's expecting big talks, but that Ukraine better come to the table fast. And equally, you have President Zelensky warning that as long as the attacks continue, it's going to be difficult to get to some sort of peace breakthrough.
Yes, President Zelensky has been warning in recent days about the prospect of another massive Russian attack targeting Ukraine's energy infrastructure. They've been struggling with attacks all through the winter. Those attacks haven't abated, even as there have been rounds of talks previously in the last several weeks. And essentially he's saying, well, look, you're getting me to the table to talk. I'm here to talk, but I'm still being attacked and you're doing nothing to prevent those attacks. So he's clearly standing up for his people in that regard.
So I guess, you know, the question then comes back to what we've been asking for the better part of the past year, at least since the Trump administration came in and put so much focus on this, is what exactly is the Russian strategy here? Is it that they want to work towards achieving some form of a breakthrough, or just string this out as long as possible with the hope that eventually the U.S. will lose interest?
Well, many of Kiev's European allies consider it just like that. In fact, they think that Russia doesn't want a deal, that they're playing for time, they're pushing and pushing, and they hope and expect that Trump will come down on their side in increasing the pressure on Ukraine. It certainly looks like that at the moment. There's no evidence that Russia's willing to stop the war until it achieves its objectives. And at the same time, it's not really able to get its way on the battlefield. It's not making much progress on the ground. So it needs some sort of diplomatic assistance if it's going to achieve its maximalist goals. And at the moment, that's where the sticking point is.
Yeah. Tony, thank you so much. Bloomberg's Tony Halpin. All right, let's get back to markets now. U.S. futures are falling, setting a cautious tone ahead of markets reopening after holidays stateside. Let's bring in Mark Cranfield, Bloomberg Markets Live cross-asset strategist. So just looking at the way markets are trading today, bit of a cautious tone. I see red on the screen, and not just because it's Lunar New Year in China and other Asian markets, but we've got big data coming up this week. We've got PCE, we've got the Fed minutes. What are you watching out for in terms of drivers?
Well, the New Year horses are running, but all in the wrong direction at the moment. It's turned pretty ugly here in Asia. Of course, the limited markets are open. Japanese markets are happening, but they're pretty weak there. But the main movers have been the U.S. equity futures, as you were saying. Both the S&P 500 and Nasdaq futures have turned pretty ugly in the past couple of hours here, selling off quite hard. Probably volumes and liquidity is a little bit challenged here, but we're seeing all the usual suspects coming into play at the same time, which is a very negative signal for what's coming ahead in Europe and the United States. It's not just the equity futures. We're seeing silver and gold being sold off, to some extent cryptocurrencies. Dollar yen is lower. The yen is almost recapturing a little bit of a haven play here, and Treasury futures are getting a bid as well. So we're seeing typical signs of people taking defensive action in a way which suggests that it's really got momentum here. Probably in the background, there's concerns that some of the AI disturbance we saw before the weekend will continue There'll be more selling of AI software type companies. And we don't have the big AI hardware players here in Asia to defend that. So that's making it a little bit worse than it probably would be. And of course, there's this build-up of US troops in the Middle East, which is keeping oil relatively firm as well. So several things background which are all building to the negative story.
Yeah. At the same time, yesterday, you and I were talking about the massive outperformance of Asian equities versus the rest of the world. Many of them closed for business today. But Goldman Sachs putting out reports saying that hedge fund buying has been quite significant, and even quite a significant footprint in many of these Asian markets, in addition to emerging markets. So what did that report tell us, and how does it translate to some of the performance we've seen so far this year?
Well, this is really focused on a relatively small number of what you might call AI hardware players. And in Asia, these are the big three: Samsung, SK Hynix, and Taiwan Semiconductor. They're the three dominant companies in that space. And they're absorbing tremendous flows from the rest of the world as people begin to think that maybe the best days have already happened in the US markets in terms of the tech expansion. They're obviously going back to the people who really still drive this from the Asian point of view. Now, this is going to get a real test. These markets are closed for the time being, but when they come back from their Lunar New Year holidays, if the US markets by then are still slipping, it's going to be a real challenge for people to withhold the investments they've made in these major companies, because they were very stretched already, even before these fund flows started to happen in the past couple of weeks. These companies are trading at multi-year highs on very stretched valuations and already attracting a lot of money from within Asia itself. So whether they can sustain it after the holiday period is really going to be a challenge, especially if US markets have started to go a bit backwards.
Yeah. Mark, I want to take you down a different tact, which is that sometimes we get accused in the media of sensationalizing big sell-offs. And that was certainly the case with JGB yields a couple of weeks ago. But I think it is worth pointing out that we've seen a week-long rally now in JGB yields. We had another 5-year auction today that went pretty well. I think the long end is down anything from 10 to 12 basis points. Is the market telling you now that some of those fiscal concerns, the jitters from a couple of weeks ago, are behind us now?
Yeah, indeed. I think there's been a complete reevaluation of the stance from investors. Before the Japanese election, they were concerned at some of the things they were hearing from Prime Minister Sane Takaichi and her colleagues. But since then, the mood has changed completely. Takaichi herself has played a much more middle-of-the-road type of role. Her finance minister has also suggested that they're going to be more patient before they make big fiscal expansions. They've been making all the right noises. And just to top it off, yesterday, there was a meeting between the Bank of Japan governor and the prime minister, and there was nothing from that meeting which suggested that the Japanese prime minister wants to interfere with monetary policy. Again, that's something investors hadn't been seeing prior to the election. So everyone is going back into their place. It's looking like the Japanese leadership here is on a much more stable footing. Their approach to monetary policy and fiscal policy is more sound, and investors are responding by taking down Japanese yields. They'd really priced in a very defensive situation back in January. That's unwinding quite quickly. We had a good auction today in the 5-year. We have a 20-year coming up later this week.
Yeah.
The Japanese yen as well is much stronger. So all things looking much better from a Japanese point of view.
Mark, thank you so much for breaking it down for us. So Mark Cranfield, Bloomberg Markets Live cross-asset strategist. Well, still ahead, Investec economist Ellie Henderson joins us to preview the highly anticipated UK jobs report. But first, French President Emmanuel Macron will meet India's Prime Minister Narendra Modi as the two countries deepen ties. More details next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. French President Emmanuel Macron is on a 3-day visit to India to advance talks on a massive defense deal for more than 100 Rafale fighter jets. He'll meet India's Prime Minister Narendra Modi and attend an AI summit as the two countries deepen ties. For more, I'm joined by our government reporter, Sudhi Ranjan Sen. So quite simply, Sudhi, what can we expect from this Modi-Macron meeting today?
Well, there are going to be a couple of deliverables, and they're going to be wide-ranging. It's going to be defense manufacturing, or joint manufacturing between India and France. And as we've been reporting, that India has decided to go for Rafale fighters. It's a multi-billion-dollar contract. The price negotiations are on. There are hundreds of missiles that India has also decided to buy. That is another big thing. On top of it, there's going to be cooperation on space, on the Indian Ocean region. Besides, when the two leaders tomorrow meet and address the AI summit, we're going to see a joint push from these two leaders to democratize AI, to talk about more on the impact side of the AI and how best it can be governed. So it's a visit that's going to have multiple takeaways, and it's happening at a time when the US is no longer a very reliable partner. Therefore, countries, middle powers, like India and a developed country like France, are hedging their risks, and they're trying to come closer to find solutions on their own.
Yeah, so interesting you bring up defense there. Clearly a big focus for European nations. And there's also going to be a meeting taking place of defense ministers. Why is this meeting important?
Well, the defense ministers' meeting is going to be more nuts and bolts. I mean, that's the reporting that we are getting, and that's from what we've heard from the Ministry of Defense, is that they're going to talk about the defense cooperation, that they're going to review it. India and France as strategic partners, they have a defense cooperation agreement that is coming to an end. It's going to be, renewed for another 10 years, looking ahead at the challenges and trying to address them. That's why it's going to be important. And also, as the fact that India is more and more buying French military hardware. That is also, why this meeting between the defense ministers of India and France are going to be very, very important. Because while the price negotiations of these big multi-billion-dollar deals are still going on, the leaders are going to talk and kind of give guidance and steer this the discussions and shepherd it through.
Yeah, and the backdrop to all of this is India are hosting an AI summit. I believe it's the first of its kind in the global south. So it's not just Macron who's heading there, but other senior members, heads of states are also being flown in to India for this event. What sort of deals are we expecting to come out of this, at least as it pertains to France?
So, deals, there are going to be lots of announcements, as my colleagues have been reporting. There have been lots of announcements on investments between companies that are going to we are going to see in the next few days. Vis-a-vis France and India in particular, there is likely to be an AI cooperation between the two countries to be announced. Why this is in particular important for India? Because it's a critical technology, and not really, not in the past, we haven't really seen India being asked to partner in critical technologies by developed countries. This is perhaps the first time that's going to happen. And this is also happening at a time when AI is likely to change the way people work, change, and have a huge impact on people's lives. At the conference, we are going to see both leaders across around 20 heads of state going to talk about governance of AI, making it more people-centric. But the bigger question then that comes out is in an AI discourse that is dominated by China and the United States, how much of these recommendations are going to work? That's what is going to be important to watch out for.
Sudhi, thank you so much for the comprehensive overview of what we can expect out of that Macron-Modi meeting later today. Sudhi Ranjan Sen. And coming up, President Trump says he'll speak to his Chinese counterpart about weapons sales to Taiwan. We'll have more next. This is Bloomberg. Now to some of the other top stories we're following this morning. Hyatt Hotels executive chairman Tom Pritzker is retiring from his position and won't stand for re-election to the company's board, citing an association with Jeffrey Epstein. Pritzker says he deeply regrets his association with Epstein and Ghislaine Maxwell and decided to quit the role he's held since 2004 after discussions with fellow board members. President Trump says he is speaking with his Chinese counterpart Xi Jinping about weapons sales to Taiwan. Speaking aboard Air Force One, Trump said he would make a decision soon. China has previously warned the U.S. to handle arms sales to Taipei with the utmost caution.
President Xi, in your talk with him recently, warned about sending more weapons to Taiwan. What was your response to him? Are you going to send more weapons to Taiwan?
I have a response. I'm talking to him about it. We had a good conversation, and we'll make a determination pretty soon.
U.S. Secretary of State Marco Rubio showered Viktor Orban with praise during his visit to Hungary as the U.S. doubled down on its support for the strongman leader before an election that could bring an end to his 16 years in power. Speaking in Budapest, Rubio pledged that President Trump would be ready to provide assistance if Hungary had any financial trouble.
And that person-to-person connection that you've established with the president has made all the difference in the world in building this relationship and in hopefully growing this relationship even more. It is the kind of thing that I think, for example, I can say to you with confidence that President Trump is deeply committed to your success because your success is our success.
And U.S. actor Robert Duvall, best known for his work on The Godfather and the film Tender Mercies, has died at the age of 95. The Oscar winner died peacefully at his home in Middlesbrough, Virginia on Sunday. Duvall built a CV that few actors matched. He appeared in more than 80 films, including Mockingbird, Apocalypse Now, MASH, and Network. Duvall was amongst the most represented actors in the American Film Institute's top 100 movies. And a look at markets as we head into the reopening of U.S. cash markets after President's Day yesterday, leaning towards a more cautious tone, as we were just speaking about with our colleague Mark Cranfield in the Asian session. The handover there, we've only got the Nikkei trading today, but it's also trading in the red. Other markets in Asia are closed for Lunar New Year. But S&P futures leaning negative, down 0.4%. European markets also seen opening up slightly in negative territory, down 0.3%. So somewhat of a dip as well. And the FTSE 100 seen opening up in the green, up 0.2%, though actually that is the close for the UK. So it did close a little bit higher. And of note today, we're going to get jobs data. So we'll be talking about that shortly, in addition to all of the other earnings that are going to be hitting this week, mostly in the mining space, which will be a big driver for FTSE performance. Last week, the FTSE was the main outperformer amongst all of those European indices, up 0.6%. But coming up, we'll speak to Investec economist Ellie Henderson about the latest UK jobs data. That's next. This is Bloomberg. Live from Dubai, this is Bloomberg Daybreak Europe. I'm Jumana Versace with your top stories. U.S. futures slide ahead of Wall Street's reopening today. Meanwhile, after the Bank of England's knife-edge vote, jobs data is forecast to show more cooling in the UK labour market. Geneva takes center stage as the U.S. and Iran hold indirect talks aimed at resolving their long-running nuclear dispute. That'll be followed by another round of U.S. brokered discussions between Russia and Ukraine. Plus, BHP shares surge after copper's rally drives bumper profits. We hear from the CFO of the world's largest miner later this hour. And a check on markets due to be reopened for trade in the U.S. today. S&P futures leaning negative, down 0.4%. So the setup is quite cautious as we get back into the swing of things. And Lunar New Year means that most of Asian equities are also closed for business as well. Brent also in focus. We are trading just above $68 a barrel. And this is ahead of those Iran-U.S. indirect negotiations that are taking place. And overnight, the Iranians saying that they're conducting military drills around the Strait of Hormuz. So you've got the military build-up from the U.S. around the Strait of Hormuz, those military exercises, but at the same time, those negotiations taking place too. So something to be mindful of there as we think about geopolitical premium. And then the pound in focus as well. We've got a slew of data coming up in the UK this week with job support today and then CPI later this week as well. Pound is trading at 136.13. We'll dive more into some of the drivers around sterling in just a moment. But time now for your front page news. The Financial Times leading on Keir Starmer's decision to abandon plans to delay local elections in May after lawyers warned the move could be illegal. Meanwhile, Les Echos leads on French President Emmanuel Macron's visit to India. French-made Dassault Rafale fighter jets, AI and trade will be in focus during Macron's packed schedule. And finally, the Wall Street Journal reports on Goldman Sachs planning to scrap its DEI criteria for its board. The paper saying that race, sexual orientation, other types of DEI factors will no longer be taken into account when the board's governance committee identifies new potential directors. And you can get a roundup of the stories you need to know to get your day going. In today's edition of Daybreak, Toronto subscribers can go to DAYB Go on the terminal. Right, at the top of the hour, we expect UK jobs data to drop ahead of tomorrow's key inflation report. For more, let's talk to Kit Reese, Bloomberg's Markets Today editor. What are we expecting out of the jobs data today, and how, I guess more importantly, how the Bank of England have to interpret this data?
Yes, so today's data is one of two really key releases ahead of the Bank of England's meeting in March. And what they're really going to want to be seeing is a continuation of recent trends. So we're expecting to see wage growth cool and unemployment remaining high. And if we do see that overall the jobs market continues to cool, it could give the Bank of England more confidence to ease interest rates going forward. So what we've really seen at the previous meeting is a really divided Bank of England. And recent comments have also served to show just how divided they are. So we've had Hugh Pell recently say that rates are a little bit too low, while we've also had Catherine Mann expressing worries about the economy, saying that it's sluggish and tepid. So we're really seeing how divided they are, and hopefully today's reading will give a bit more clarity on the path forward. And of course, tomorrow's inflation data will also be really closely watched. We're hoping to see inflation come down. The Bank of England's targeting 2%. It's still a little bit higher there, but hopefully overall it should give a bit more certainty as to the path forward.
Let's talk about the unemployment rate, because it is expected to stay at levels last recorded at the height of the pandemic. It's been slowly ticking higher and higher. It just seems to be perhaps another unpopular issue for the UK Prime Minister, who's coming under a lot of pressure, both economically and politically at the moment.
I mean, definitely, it's going to be a big issue for voters, for households. People are going to be really feeling this. And part of the issue is the higher costs of employment that were introduced last year. So taxes have gone up for businesses, the minimum wage has been hiked, energy costs are higher. So it's been really expensive to hire people. It's been really tough for businesses too. And we have seen a return of political risk at the start of this month. A couple of questions over Keir Starmer's, the leadership of the country and Keir Starmer's future. So this is definitely something to bear in mind, especially given we've got local elections coming up. We've got the spring statement next month. So a couple of risk events on the horizon. So we'll definitely be keeping an eye on how the pound and gilts react after today's release.
Bloomberg Markets Today editor Kit Reese, thank you so much. Well, for more, let's talk to Ellie Henderson, economist at Investec. My colleague there just gave us sort of an overview of what to expect out of the jobs data. I think the expectation is that we are going to continue to see elevated unemployment rates. And so let's take it back to the Bank of England. It's a bit of a surprise to the market that we got such a dovish split at the last MPC meeting, 5-4, sort of laying the groundwork, you think, for a March rate cut?
It did take us by surprise how close the vote split was. It was another 5-4 vote, with Governor Bailey seemingly presenting himself as the swing voter. But actually, when you look at the forecast that accompanied the decision, the new forecast from bank staff, you can understand why there was a more dovish tilt. You know, we saw GDP downgraded, we saw inflation downgraded. Does that warrant a March cut? Well, our base case is that we will get another on-hold decision in March and that the Bank of England will cut again in April. But clearly the risks over a March cut have risen following last week's meeting. And really, it depends on the data this week. We've got labour market data in half an hour's time. We have inflation tomorrow. And then on Friday, we have retail sales and PMIs. This will all feed into the picture of the health of the UK economy.
Right. So on one side, we talk about the softening of the labour market. On the other, there's also been the phenomenon of quite sticky UK inflation. We have the prints coming up tomorrow. At what point is the weakness in the labour market going to start seeping into the inflation data?
It's all to do with wage growth. And actually, in the latest Bank of England meeting, they put out what bank staff's estimate of a wage inflation that would be consistent with 2% inflation, and that's 3.25%. At the moment, wage inflation, although coming down, is tracking above 4%, and that's keeping services inflation elevated. We expect wage growth to continue to decline. We think we'll see that in half an hour's time, and that should weigh on services inflation going forward. But if it doesn't, that's a key upside risk to our inflation forecasts.
Where do you think the base rate ends up this year with the Bank of England? And ultimately, what is the neutral rate going to look like for the UK economy at this point?
So our view is that we will have 2 25 basis point cuts this year, one in April, one in July, and that will take the bank rate to 3.25%. We then think that will be followed up by one more 25 basis point cut in 2027, taking the bank rate to 3%, which we tentatively estimate to be that elusive neutral rate. So we think as we move closer to that neutral rate, the Bank of England can afford patience and slow down with rate cuts.
Okay, so that's the Bank of England, your outlook for this year. Let's square that up versus another major central bank, the Fed. Lots of questions circulating about what they're going to be doing, especially in the second half of the year. And there you look at the most recent data that's come through, sort of a benign inflation print, but actually more robust jobs market data, a bit of an inverse if you compare it to the Bank of England's right now. What do you think that means for the policy direction coming out of the U.S.? Because there doesn't seem to be any imminent justification for rate cuts.
So the Fed has a slightly different mandate to the Bank of England in terms it has a dual mandate. So it doesn't just have to worry about inflation being at the 2% target. It also has to ensure maximum employment. Now, the Fed's two goals have been in conflict recently. You've got upside risk to the inflation outlook and you've got downside risk to the labour market. And we think the cuts at the back end of last year were really to address those downside risks to the labour market. But as you point out, the latest labour market data was a little bit better than was expected. Payroll growth was strong. But what we're looking at is the unemployment rate, because payroll growth, that's impacted by not just demand for jobs, but supply as well. And President Trump's immigration policies has reduced the supply of labour into the US. So it's natural that these numbers come down. However, the unemployment rate is higher than it was a year ago, and that is concerning for some committee members. However, we think that most of the hard work was done last year to address those downside risks, and now there's the groundwork for a period of pause with an interest rate cut, we think, not coming until June under the new Fed chair.
Yeah, we've been spending a lot of time talking about sort of the tech route last week, but underneath it all, the U.S. economy seems to be bubbling along just fine. It wasn't that long ago that we were talking about the possibility of a recession. Is that all in the rearview mirror now, that when people speak about the U.S. economy, nobody seems to be talking about the possibility of a recession anymore in the next 12 months?
Yeah, there's absolutely no doubt that the US economy has had a very good year and that growth is doing really well. We point to three key things which actually we think will be supported this year as well. So firstly, AI investment. Now, there's a difference between AI investment and AI adoption. AI adoption in the US is running at similar rates to over here in Europe, both in continental and here in the UK. What the difference is the AI investment is very heavily based in the US. So that's the building of data centers. And that's really boosted US growth this year. We also point to the K-shaped economy in the US. Now, Fed Chair Powell has spoken a lot about this in terms of its high net worth individuals who have benefited from stock market gains, driving that consumption growth. It's not broad-based. But we also wonder if there is a bit of mismeasurement in the national accounts. For example, inventory data. Prior to tariffs, firms front-loaded a lot of imports to try and avoid those tariffs. However, only a third of inventories relative to this have been drawn down. We wonder if that should be higher, and we wonder if there'll be revisions in the coming reports.
Ellie, really good to chat to you. Thank you so much. Ellie Henderson, Investec Economist. Well, the UK government has dropped plans to postpone local elections in 30 areas after legal advice suggested the delay was likely unlawful. The reversal follows a lawsuit from Nigel Farage's Reform UK party, which accused the government of trying to obstruct democracy. All local elections will now proceed as scheduled this May, leaving councils in a race against time to organise the votes. And coming up, bumper copper profits deliver for BHP. We'll bring you our interview with the CFO of the world's largest miner next. This is Bloomberg. BHP shares surged in Australia after it posted earnings at the upper end of analyst expectations. A years-long shoring up of copper production combined with a historic metals rally offset a lackluster period for its giant iron ore business. Copper accounted for more than half of the group's profit for the first time. Vandita Pant, CFO for BHP, gave us her take on the company's performance.
Very pleased with the copper performance in the half, along with the rest of the portfolio, Paul. For the first time, 50%, more than just about 50% of our earnings, EBITDA, came from copper. And performance across our assets has been very good. To take example of Escondida, which is our largest mine that we run in Chile, we are revising the guidance up for this year and next year, which means that we will be producing more copper in the constructive copper price environment that we are in. So very pleased with that. And not only that, across our assets, as you would know, we have a lot of byproduct in our copper segment. In our assets, in the half, almost $2 billion of byproduct revenue was booked across gold, silver, and uranium. So a fantastic business and really reliable performance coming through across all our assets, with more to come in terms of the higher guidance for Escondida, for example, that I have given, along with the outlook on medium term with the copper projects. We have 4 very attractive copper programs around the world, in Chile, in Argentina, in Australia, and in the US, which means that we will increase our copper production from where we are into the future as well. Just last 4 years, copper has increased by 30% in production volume, and we are the largest copper producer in the world. So from here, we go into increase in copper to 2.5 million tons of copper equivalent, including byproducts, volume by mid-30s.
Now, you, of course, made a bid for Anglo American's copper assets last year, which wasn't successful. But do you see there being more just asset-specific M&A coming forward or blockbuster deals? What are you looking at doing in this space?
So look, we are very deliberate in the way we execute our strategy, and that is not predicated on inorganic or M&A growth. Of course, we are a big company, so if there are opportunities to bolster our organic portfolio, which is massive, with inorganic opportunities, we do so. But the bar for that is very high. It has to create shareholder value, has to be with discipline, and has to be good quality assets.
That's Vandita Pant, BHP CFO, speaking to Bloomberg's Paul Allen. Now, let's bring in Clara Ferreira-Marquez, Bloomberg Managing Editor for Asian Energy and Commodities. So a lot of talk around copper. How important was copper in driving these earnings today for BHP?
Very important indeed. I mean, you heard it from Vandita there, the sheer volume of, if you look at the realized price, it's up by almost a third on the back of this incredible metals rally that we've seen the last few months. And that really has benefited BHP at a time when they're able to sustain copper production. And really, that's what it's about. And copper production is not letting it drop. And they have been able to do that. And then, of course, these incredible earnings off the back of byproducts. So I think, again, Vandita mentioned gold, silver, and uranium, very, very helpful numbers there too. So that definitely offsets a slightly more challenging half for iron ore and, of course, coal.
So that's what I was going to say. I mean, their traditional business, other minerals such as iron ore, potash, where do they fit into the miners' priorities? Or should we just assume that they will be deprioritized?
Oh, not at all. I mean, I think that the iron ore is really just a change in focus. So they're moving towards what they would call metals of the future, metals that will be very much necessary in an electrified world, of which, where supply is short. That's really what the copper story is about. Potash, they're not yet producing. They'll be producing from the middle of next year. That's a really interesting project, one that they see as, I think, structurally quite similar to iron ore in the sense that there's a lot of upfront cost, but then potentially enormous margins going forward. The market remains to be convinced. I mean, there's it's costing a lot of money. The cost went up. We found out in January, of course, up to 8.4 billion for the first phase. That's a huge amount. But the story today is really all about copper. It's about the copper expansions, whether that's Escondida or some of their new projects like Vicuña.
Clara Ferreira-Marquez, Bloomberg Managing Editor for Asian Equities and Commodities on BHP results. A very strong reaction today in trading, up more than 5% in Sydney. Now, watch that interview with BHP CFO Vandita Pant again at Bloomberg's Video Hub. We also have live streaming news, all our TV shows, documentaries, reporter analysis, and more. It's all out at bloomberg.com/videos. Now to some of the other corporate news are following today. The Wall Street Journal says Elliott Investment Management has built a more than 10% stake in Norwegian Cruise Line. Reports say the activist investor will engage with the company and push for changes to fix its underperformance. Norwegian is the fourth largest cruise operator in the world by number of passengers, but it's lagging behind its rivals. And Bloomberg has learned that SpaceX and xAI are competing in a secretive new Pentagon contest to produce voice-controlled autonomous drone swarming technology. Sources say Elon Musk's companies are amongst only a few selected to compete in the $100 million prize challenge. While SpaceX is an established defense contractor, AI-enabled weapons development marks a new and potentially controversial move for Musk. Bloomberg has learned that Anthropic's talks with the Pentagon about extending a contract have hit a snag. Sources say Anthropic wants to put guardrails in place to prevent its Claude AI tool from being used for mass surveillance or for developing weapons that could operate without human involvement. The company says it's having productive conversations with the Defense Department on the issue. U.S. lenders are poised to see new mortgage loan requirements as the Federal Reserve comes closer to unveiling a long-awaited bank capital proposal tied to Basel III. The new measure would consider increasing the risk sensitivity of capital requirements for mortgage loans on bank books, potentially using loan-to-value ratios to determine risk weights. And plenty more coming up on Daybreak Europe. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Well, some charts that we're focused on today, obviously a lot of focus on the negotiations that are taking place in Geneva, indirect negotiations between Iran and the U.S., also in parallel discussions around Ukraine and Russia as well. But into that, let's take a look at the so-called safe havens and the relative performance. What we have seen in the last couple of weeks or so is a good amount of geopolitical premium being priced into oil. And so obviously what happens in the next coming weeks, especially if these negotiations drag on for a bit longer, don't expect a lot of that geopolitical premium to be unwound. So something to be mindful of there. And then gold, obviously, as well, one of the major beneficiaries of all of the geopolitical uncertainty in the world as well. So those two trends remain intact as we think about the geopolitical backdrop and why some investors are choosing to put money into these places with so much policy uncertainty. But let's switch over. Big day coming up in the UK. We have the jobs data, as we were just previewing a short while ago. And take a look at this. And this really is just a beautiful, I would say, depiction of what is going on with the jobs market and the fact that there had been several years of positive job creation. That has changed in the last year or so, with those red bars pointing to negative job creation. The fact that the unemployment rate is still pretty sticky. It's trending upward, is high in the UK economy at pandemic-led levels. A question mark for the Bank of England and, of course, politically as well for the Prime Minister. So this is a good depiction of that and what has been happening with the UK labour market. Jobs data comes out in just a couple of minutes in the UK, 7 a.m. And then switching over, we talk about the policy choices at hand for the Bank of England. The base rate now is sitting at 3.75. Inflation has been sticky at 3.4. We get another UK CPI print to watch out for tomorrow. The expectation is it is going to dip a little bit lower to around 3%, which perhaps would give them the justification to go for that interest rate cut that is priced in March. It's about 70% priced in. But from here onwards, you want to keep an eye out for both what is happening in the jobs market today and the inflation data tomorrow, which is expected to soften. And so speaking of those risk events, 7 a.m. UK jobs data, 10 a.m. UK, we get the German zoo survey. So it gives you a good reflection of how German businesses are thinking about the German economy. And then later today, watch out for headlines out of President Macron's meeting with the Indian Prime Minister Narendra Modi. That was it for our show. The opening trade is up next. This is Bloomberg.